Welcome to the P&C General Insurance Policy Lifecycle Quick Bite video, presented by Insurance Domain Training Center.
Welcome to this explainer. Okay, today we're tackling the massive, complex, and honestly fascinating world of global property and casualty, or P&C, insurance. Whether you're a complete beginner trying to figure out how a policy actually works from start to finish, or an IT professional tasked with building the software systems that make these massive global transactions happen, you are in the exact right place. We're going to break down the entire journey of a risk.
Right off the bat, let's look at this map. Think of it as the beating heart of any global insurance operation. Notice how it's basically split into two distinct hemispheres. Over on the left, with those orange and yellow petals, we have the creation of a policy, the steps we take to acquire a customer and evaluate their risk. And then on the right side, in the greens and teals, we've got the maintenance of that policy once it's actually active. Here is our roadmap for today. We'll start with Phase 1, new business, move right into billing and policy issue, shift over to Phase 2 for policy services, tackle cancellations and reinstatements, and finally, wrap things up with the renewal cycle. Let's get to it.
Starting right at the top, Phase 1, new business. This is literally the birth of an insurance policy.
So what actually is new business? Well, on paper, it's just a customer buying a policy for the first time. But in the real world, it's the lifeblood of the whole operation. It's the primary growth driver for insurers globally. It represents that crucial inflow of premium income that lets a company expand its market share and stay financially healthy. Without new business, the wheel simply doesn't turn. How does this actually play out? Well, looking over at the left side of our map, it all kicks off with a submission. That's when a broker or agent hands over an application loaded with risk data. Next, we hit underwrite. This is make or break. The insurer looks at the risk, maybe checking a homeowner's property location, and decides, do we accept or decline this? If it's a yes, the system moves to rate, crunching the numbers to calculate the exact premium based on statistical models. Finally, out pops a quote to offer the customer. For the IT folks tuning in, this whole flow, it's just a massive data intake and algorithmic evaluation engine.
Let's put this into perspective with a quick global auto insurance example. Say you've got a driver with a spotless record and a super safe car. The underwriting system sees that data and drops them into a lower rating class, right? They're statistically way less likely to file a massive claim. Because of that hard data, the rating algorithm spits out a lower quoted premium compared to someone with a history of accidents and traffic tickets. Simply put, the risk data directly dictates the price.
Okay, moving on to the next major step, billing and policy issue. This is where that theoretical quote turns into a legally binding contract. Now, once that quote is accepted, we need to talk about billing. From an IT perspective, modern systems aren't just, cashing checks. They are an absolute technological powerhouse. These automated platforms run constantly in the background. They're generating invoices, processing online payments or bank drafts, and meticulously tracking due dates and grace periods. They even power those customer portals so you can log in and pay your bill at 2 in the morning. And crucially, if a payment drops, this exact system automatically triggers the workflows that can lead to a policy lapsing. It's the financial engine keeping the lights on.
All right, Phase 2, policy services. We've collected the premium, the policy is active, now we have to actually maintain it.
Jumping back to our lifecycle map, we're now crossing over into that right hemisphere, the swirling green and teal petals. Once a policy is active, well, life happens, right? Customers buy new cars, they move to a new house, they call in with a bunch of questions. This entire side of the wheel is dedicated to handling all of those midterm tweaks, inquiries, and modifications to the active contract. Now, inside policy services, there are two huge concepts that trip up beginners and IT developers all the time: endorsements versus rewrites. Let's clear this up once and for all. An endorsement is a standard, legally binding tweak to an existing policy. Adding a new teenage driver, endorsement. Adding earthquake coverage to your home, endorsement. But a rewrite, that's entirely different. A rewrite is a system-level correction of a major foundational error. If a piece of data that governs the entire policy's rules is wrong, you can't just endorse it. The system literally has to rewrite it from scratch.
To really see why a rewrite is such a big deal, imagine a U.S. auto policy was accidentally issued for the state of Tennessee, but the driver actually lives and drives in Texas. In P&C insurance, every state has vastly different laws and regulatory minimums. If the system thinks the car is in Tennessee, it's applying the wrong laws and doing the wrong math. You can't just slap an endorsement on the address and call it a day. The system demands a rewrite transaction to essentially rip up that flawed foundation and rebuild it using the correct Texas underwriting rules. Next up on the right side, cancellations and reinstatements. Basically what happens when things stop and when they try to start again. Let's walk through the actual timeline of a lapse. First, the premium due date comes and goes. A few weeks pass, the grace period expires, and boom, the policy officially lapses. Coverage is completely dead. Now, if a customer realizes this and wants their coverage back, they can't just quickly pay that old bill. Nope, they have to submit a formal reinstatement application. The insurer's system is going to demand all the back premiums, the late fees, and often brand new proof of insurability. Like for auto insurance, they might demand a physical inspection just to prove you didn't crash the car while you were uninsured. Only after passing those strict checks will a reinstatement approval actually reactivate the original policy.
And finally, we hit the bottom of our map, the renewal cycle. This is the infinite loop of insurance.
There's this huge misconception out there that a policy renewal is just some automatic IT system rollover. It's absolutely not. It's an incredibly active underwriting event. During renewal, the insurer system pulls in fresh, updated policyholder info. It looks at the claims history from the past year. It even evaluates external stuff like, hey, did the frequency of natural disasters in this property's area spike recently? Based on all that new data, the system and the underwriter decide, do we renew as is, do we renew with modifications and a higher premium, or do we just straight up refuse to renew? Here's a super relatable example. Say a homeowner decides to put a brand new swimming pool in their backyard right in the middle of their policy term. When renewal time hits, the underwriting system is going to flag that pool. Why? Because a pool is a massive liability risk. Someone could slip, fall, you name it. The risk profile has totally changed, so the policy won't just blindly roll over at the old price. The system recalculates the exposure and the policy renews, but with a higher premium to account for that new pool. Now, let's tie this all together. Look at the very bottom of our diagram. See that bold red arrow marked renewal? Notice where it's pointing. It doesn't go all the way back to quote or new business. A successfully renewed policy feeds directly back into the policy services flow. The life cycle just begins another term of maintenance, inquiries, and changes. It's a continuous, swirling loop of risk management. Which leaves us with a pretty fascinating final thought. We've just seen how incredibly dynamic this whole journey is. If every single renewal for millions of global customers triggers a fresh wave of data updates, complex risk reassessments, and intricate billing cycles, how do modern IT systems keep this infinite loop running 24/7 without just breaking down? Well, it takes incredibly robust architecture, seamless integration, and absolutely airtight logic. And understanding this business lifecycle, that is the crucial first step to actually building the software that powers it. Thanks for joining me on this explainer. I really hope it helped to mystify the journey of a risk.
Thank you for watching the Quick Bite series from www.insuedot.com. Please like and subscribe to our videos for you to get notification when we upload new videos.